let's just say you're a bank, all right? You're a bank. And your job is to take those money, save it, and then use it properly in order to promote the economy, okay? So let's just say we put $1 million into the bank, okay? And what does the bank do with it? The bank then lends it out to entrepreneurs, right? So maybe I want to start a restaurant, and so I borrow $1 million from the bank, okay? Question, how much money is in the bank now? It's zero, right? Okay, that's just math, guys. Look, if I take in $1 million and I lend it out $1 million, I should have zero, because that's just basic math. But that's not the answer. The actual answer is $2 million. And what you need to understand is that each bank has the ability to print its own money. And the bank is a mechanism for liquidity in the economy, okay? And this is a great illusion. This is the delusion, okay? Behind the economy, where money is just an idea, it's a concept, it's a collective hallucination. All right? Now, but the problem is there are thousands, tens of thousands of banks everywhere. So how do they know how to coordinate together? Okay? And this is something else you need to understand about the system. There's actually something called a signaling mechanism. Signaling mechanism. Okay? So all these banks are separate, but they are linked together into something called a central bank. Okay? A central bank. And what does the central bank do? The central bank signals whether or not to lend money or not to lend money. And this mechanism is called the interest rate. Okay? Now, again, if you study economics, what they will teach you is that depending on the interest rate, if it's low, maybe 1%, or 5%, or high 5%, then that will determine how consumers behave. If the interest rate is 1%, what this means is I can go to the bank, get money, and buy a house, right? If it's too high, 5%, then I don't want to go to the bank to buy a house. And this is what you're taught in economics class. But there's actually another explanation, which is the interest rate is not to signal consumers or homeowners to buy, but rather for banks to lend or not.